Finance with Manvi. This is video 52, and we're diving into a question that I get asked all the time. Should I invest in ETFs or mutual funds? On the surface, they look pretty similar. Both are baskets of investments. But once you understand the differences, you'll realize that one could save you money, give you more control, and even reduce your taxes. Let's break it down clearly and in detail. All right, for our agenda today, we have what are ETFs and mutual funds, how they're bought and sold, fees and expense ratios, tax efficiency, and which one should you choose. Okay, so let's start simple. Imagine you want to invest in the stock market, but instead of just picking just one stock like Apple or Amazon, you want a whole group of them. That's where both ETFs and mutual funds come in. An ETF, or an exchange traded fund, is a bundle of stocks or bonds or other assets you can buy like a regular stock on the stock market. It's like buying a little slice of a bunch of companies in one click. While a mutual fund is also a bundle, but you buy it from the fund company, not the open market. You don't trade it instantly. You submit your request and it processes it at the end of the day. If you wanted to invest in say the top 500 companies in the US, you could use an ETF like VU or SPY or a mutual fund like VFIAX. Both hold the same stocks, but everything else, that's where it gets interesting. All right, so this is one of the biggest practical differences. ETFs are traded like stocks. This means that you can buy and sell them anytime the market is open at a live price. Want to buy it at 11:36 a.m. when the price dips? Go for it. Mutual funds, on the other hand, are priced for only once per day and at market close, usually 4 p.m. Eastern. You can request a trade anytime, but the price you pay or receive is the end of the day NAVE, net asset value. So if you have less control over timing, you would probably go with mutual funds. Summary is ETFs are more flexible and controlled. Mutual funds are slower and less practical or precise trading. Next, we'll go on to fees and expense ratios. Now let's talk about money, specifically fees. Most ETFs are passively managed, meaning they track an index like the S&P 500. Because of that, they tend to have a very low expense ratio, sometimes as low as 0.03%, which is just 30 cents per $1,000 invested per year. Mutual funds, especially actively managed ones, often have higher fees. Some charge 1% or more annually. And some charges have sale fees, also known as loads, just for buying it or selling. Think of it like this: if you invest $10,000 in a mutual fund with a 1% fee, that's $100 a year. In a low cost ETF, it might just be $5 to $10 per year. Over time, that difference adds up a lot. All right, tax efficiency. This is something many beginners totally overlook. Taxes. ETFs are generally more tax efficient. Why? Because of how they're structured. Most can trade internally without triggering capital gains, so you only pay taxes when you sell. Mutual funds, on the other hand, however, can pass on capital gains taxes even if you didn't sell anything. If someone else in the fund sells and the manager has to adjust holdings, you might owe taxes. So yeah, you could be taxed even if your investment lost value, just because of how others behaved. That's not fun. So if you're investing outside of a retirement account, like a regular brokerage, ETFs usually win on the tax side. Okay, let's wrap this up with you. Okay, so which is better for you? Choose ETFs if you want lower fees, you like control and flexibility, you use a brokerage like Fidelity, Robinhood, or Webull, and you want to avoid surprise tax hits. Choose mutual funds if you're investing through a 401k or Roth IRA that offers limited choices. You prefer a hands-on off approach and you're okay with paying a bit more for automatic management. There's no universal winner. It just depends on how you invest and where you invest. Thank you so much for watching Finance with Manvi. If this video helped you understand the difference between ETFs and mutual funds, give it a like and comment which one you prefer. Are you a VU plus chill investor, or do you like mutual funds with autopilot vibes. Either way, the important thing is that you're learning and growing. I'll see you in video 53, where we'll dive even deeper into building smart wealth one video at a time. Thank you so much for your attention. Goodbye.